Hello, everyone. Didn't I tell you? Didn't I tell you on Monday? I told you about GCT. I told you. Today's Tuesday. Well, I told you on Friday. I told this weekend, actually. I told you this weekend, and I said we are going to take advantage of the market. Welcome to this channel. Welcome to the Smart Investor. Smart because I'm going to show you how to take advantage of the market. And for you to take advantage of the market, you need to be educated and you need to listen to me once in a while. If you do that, then you have a chance. Okay. So, what we're doing is very simple. We are going to take advantage of the market by understanding what's going on in the market, by understanding the price risk movement and the credit risk. Okay. Just like the hedge funds. We don't worry so much about the credit risk. We just want to make sure that thing doesn't have any credit issue, that it makes money and everything else. But we're going to also focus on the price risk. We're going to focus on how the stock moves. And what I told you this weekend is that I said I found a company called GCT. This is a reminder, just in case you forgot. So let me show you. Let me show you the video that I was talking to you about. Okay, so listen very carefully what it says. All right. Don't forget, subscribe to this channel and like what you hear. I will show it to you. Just give me a second, right? So what are we doing here? Well, we're going to look at a company, first of all, is that A, no one is looking at, meaning that basically the P ratio is pretty low. B, we want a stock whose financial are in good shape. C, we want some companies whose stock price hasn't done anything recently. There are plenty of it. Because remember one thing, because if it's a good thing, what everybody else is gaining on it. No, you have to understand, and this is part of the channel as well, is you need to understand the environment that you're in. The environment that you're in the stock market, and the stock market is like a child, right? A child wants certain things when it wants it, how it wants it, and the way it wants it. If he doesn't get it, it vomits and it gets upset, and that's where you have stock market crashes. Therefore, you don't want to be looking in that playpen. You want to look at the other playpen where nobody's looking. So let's take a look at a company. Let's take a look at a company called Giga Technologies. And the reason I want you to take a look at this company is because I think the company. Okay? So that's when I told you that. So what do I do? Today is Tuesday, and I get it on it, right? Look at this. Let me take you. I'm now going to take you to my Robinhood account so you could see right exactly what happened on this particularly stock. I took $5,000 or more or less, and I let me give me a second. Okay, let me share my screen now. Let me share my screen again. Hold on, stay with me. Don't forget to subscribe. Okay, here we go. How did that work? What happened? Is it magic? Is it a surprise? No, no. First, I pick a company with no credit issues. I pick a company that is growing. I'm not going to go through the same thing again. Take a look at the video. I think I put the link to my channel so you could understand what the company does. But basically, we got sales growth, we got EBITDA growth, and we have low amount of liquidity, low amount of debt, so almost no interest expense, so that I could focus on how the stock moves. The name of the game. You're not going to work for these people, right? You're not going to work for GCT, right? You don't care about that. The name of the game is to make money in the stock market. The name of the game is to make real money, not 10% a year. I'm talking 30% in one day. Right? Not bad, right? Thumbs up. How did I do it? Was it luck? Well, hold on. It's not like I've been proposing like 500 companies and then I say, oh, look, like the way Tomley does, right? He presents a bunch of companies, blah, blah, blah. It's also great. And then once in a while you got a good call. No, 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 no. I only show you like 5 or 6, right? And look at that one. Why that one? Let me explain to you what happened. There's no secret. I mean, it's not like I have a magic sauce here, right? I mean, first of all, you need to understand, you need to learn. One thing you need to learn from this is that you need to differentiate the credit risk from the price risk, right? I mean, hedge fund managers make a huge amount of money not by picking the next nvda and then riding it for 2 years. No, the way they make money, um, let me answer those comments in a few seconds. The way you make money in the stock market is really by understanding how the thing moves, and it's not magic. I always make the stupid example, not stupid, but that, is it going to be cold this winter? Yeah, I think so, right? Because everything cycles, stock prices are the same. Now, of course, they're not going to keep going up on Monday and going down on Tuesday and going back up on Wednesday. No, 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 no. It's sometimes the pattern is kind of big. The pattern is, I'll answer all these questions. Keep asking the question, I will answer them after. The pattern keeps moving all the time. You have to kind of detect what's going on. But one thing you have to realize, there's the pattern. That's one thing. Okay. Then there's the noise. The noise is the stock itself of the company, right? The financial of the company. Well, you need to make sure you don't have an issue with that, because obviously if the company is going to file for bankruptcy, it doesn't matter how it moves, they're going to disappear. Or if the company has bad earnings, and then you have to deal with the earnings, and it gets more complicated, right? We're not at that level of complexity yet. But then, of course, you need to understand what the market is doing. But right now, and I told you, you need to understand what the story is. Right now, the story is it's kind of simple. They are basically waiting to make sure we don't have a recession. They lowered the rates for you, right? They lowered the Fed fund rate by 50 bips. Don't worry why they're lowering it. Don't worry about the Fed fund rates, what it is for. All you care about is that they lowered the rates, so the rates are going down. Therefore, that should favor stocks as long as we don't have a recession on our hands, because then you've got to lower rates to avoid the recession. So therefore, it's kind of a moot point. And right now, even though we lowered the rates, the market is not really going anywhere. And it's annoying if you want to make money in this market. Where you're going to buy and you're going to hold and wait. You could do that, but don't forget, when you don't do something, you could be doing something, you're losing money. Okay, so you want to do something, but you need to do what? So the market right now is waiting. So that's kind of the environment that you're in, and the environment is pretty safe in the sense that, well, I mean, so far the GDP is not bad, unemployment is up, but it's not that bad, and everything that we're seeing a little bit. Well, the war in the Middle East is going to be an issue, obviously. We're seeing a little bit of that wasn't an issue before. So right now, that's kind of what we're seeing, right? It seems to be under control. So all we need to know is we want to make sure we have positive news. Today we have the PMI, but more importantly, Friday is going to be unemployment. So once we look at unemployment, we should be going up a little bit. Hopefully we don't go too far up, and then we'll be fine. So you need to educate yourself with that. So now, of course, today, show me the money is right. Like the war in the Middle East, bring petrol up in the front. But so now we have another another product in the mix, right? So now we have to. There's a new player in the story. So the story is, well, are we going to have a war in the Middle East? We know who's going to win. What we don't know is, how long and the consequences, but more importantly, the reason you need to worry about the war in the Middle East is because of oil. Don't forget, the Fed is data dependent. The Fed is going to look at the CPI. A big chunk of the CPI is energy, oil prices. Obviously, if the economy is slowing down, then oil prices are going to go down, and therefore you're not going to have a problem with inflation, because the amount of oil prices is not gonna go up. But if it goes up, then obviously it's impact the inflation. The Fed is gonna say, whoa, 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 hold on. I mean, I thought I had this inflation under control, and it was under control. I'm not talking about the real inflation, right? The everyday people are saying, listen, we're suffering here. I'm talking about the CPI number. We're just purely talking CPI number, the data that the Fed is looking at. They're going to say that could have an impact on the CPI, quite frankly. And if it has an impact on the CPI, then the Fed might not lower the rate as fast as we can. Although yesterday, Powell said, and it's important, he said, listen, I don't think I'm going to go all crazy. I'm not too worried. So don't expect me to do 75 bips or 50 bips. Let's see. But I'm not too eager in lowering the rates, which is good. Okay. And I mean, he thinks that we don't have a problem with inflation. That was before the thing, what happened with Israel today. And we don't have a problem with recession. Let's see what happened on Friday. But having said all this, and I know it's kind of complicated because you got all these ponies in that race, but you need to grasp the concept of what's driving this. So if we've got this thing taken care of, the market understanding seems to be like, okay, calm down, little doggy, be nice, stay in the corner, don't rock too much. Then, and we know that the company is a good company, then we could focus on the actual stock. Like in your environment, you sit down, you look at it, right? And you look at don't forget now let me share with you what the stock did today, so you could see, you could feel the power of this thing, right? So right, so this is the chart, right? Let me give you a 1 minute. So basically, what's been happening overall, and the reason why I was recommending the stock is, I see the 50 moving average here. See how it hugs, very nicely the chart. Where it at some point it didn't particularly care. But what you really don't see, what you don't see is, you don't see the purple line, which is kind of the 20-day moving average. And there you see that it's really hugging it really close, right? It's hugging it and hugging it. And so whenever it goes away from it, it ends up coming back. And then what's unusual right now is that it broke through all of the lines. And it did this then at that time, and it kept on. Usually when it breaks it like that, it tends to, do well. We'll see. So right, that was kind of one vision that I had. And I mean, it's not scientific. I mean, what's going to happen tomorrow? Maybe it hugs it back again. But the point is, at that time, I don't want to win every single day. I want to win for one day. I want to make 37% in one day. I don't want to make 37% every day, right? Maybe tomorrow it changed, because tomorrow it kind of go back to the concept of going back to the 50-day moving average, like it's doing here and it's doing there. He hasn't done that, because so far he hasn't gone anywhere. He hasn't done anything. Just it move in one direction only. Something is happening here, right? I mean, the stock was up, I think, 22% on Friday, I think, and it was down on Monday, but it was back up again today. Today was up 9.70%, right? The stock doesn't go back up by 970% for no reason, but yet The reason I like the stock as well, right, is because of this. First of all, you could see the beta. The beta means that it's very volatile stock. I mean, if you want to make money in options, it's simple. You just look for the volatility. You make money on the way up, on the way down, on the way up, on the way down, right? You just keep banking on it. Now, what I like about this is because there's also the other story is the P of 9, right? The P ratio is very low. The name hasn't been discovered, or nobody cares about the name, right? Don't forget, it's a $1.4 billion market cap. That's a very small. That's a mid cap. Okay, it checks all the boxes. Now, the start. I mean, look at the earnings. Look at the earnings per share, right? If you believe in that, look at sales. I mean, there's a trend there, people. Okay, and the P ratio is at 9, assuming 278. But the way this thing is growing, we're looking at potentially $4 next year's earning per share. That means the P ratio is only 6. And it's not like the stock was not at $40 never. It was there for a while, right? It was kind of wobbling around. And then, the same way NVIDIA got hit. Don't forget, NVIDIA doubled its earnings, and yet it's being treated horribly by the market. Why? I don't know. I mean, I haven't looked at NVIDIA in detail, so it's tough for me to say why. But this guy got hit too, as you could see, right? It pushed it down and pushed it down, even though earnings were great, and it kept pushing it down. It didn't like it because then the story is the market is basically telling the Fed, I want lower rates. Okay. And it's pressuring the market to get lower rates. So the market gave it the rates, gave it the 50 bips, and it's saying, okay, right, fine, great, but I'm going to need more rates. So now so now we're focusing on, so the story seems to be moving with the mid cap, the small caps, right? It's saying, okay, so you make sure you download, you reduce the rates, right? Yeah. Okay. So now let me look at this stock again. Oh, interesting. It's growing. It's a small cap. Sales are going up. And look at the video that I gave you, right? It looks interesting. And then, of course, if you look at some of the news on this company, nothing really major except today, is trending stock Giga Technology a buy now. I don't know if that's what drove the stock price by 9%. But if you look at the article, tab instead, right? You see this Giga Cloud? This came out today, right? Zacks does a bunch of research. I mean, these are not written; they're kind of generated more or less. But the point is that Giga Cloud has recently been on Zacks list of the most searched stocks. So basically what they do is they have an algorithm that go for people that are looking at the stocks like myself, right? And say, oh, well, people are looking at this thing. Therefore, you might want to consider some of the key factors. Now, of course, like I always said, if you're going to go after everyone has gone through, like you don't want to buy when everybody else is buying, right? You want to buy when everybody else is selling. So not everybody's buying the stock yet, but 9%, that's a lot, right? Shares of this company return 18% of the past month. That's high, right? Versus 2% for the S&P 500. Even it beats the industry, service industry that Giga Cloud Technology does. What could be next? Earnings estimate. Rather than focusing on anything else, we at Zach prioritize evaluating the change on the company's earning projection. That is because we believe the fair value of its stock is determined by the present value of its future stream of earnings. Well, I mean, that's not new. Basically, it's like saying, if I give you $1,000 every year and the discount rate is 10%, how much is all that money worth today? It's worth $10,000. So he's basically saying, if I look at the projection of the future earnings and the future earnings, I think they're looking at earnings per share, the stock is worth that much today. We essentially look at how sell side covering are revising the earning estimate. They don't even look at cash flows. They're looking at earnings per share purely to reflect the latest business trends. And if earnings go up for a company, the estimate, the fair value goes up. A higher fair value than the current market drives interest in buying the stock, leading to its price moving higher. This is why empirical research shows a strong correlation between trends in earnings estimates and near-term stock price movement. There is a correlation, but is there a causation? Right? What do I mean by that? What is the difference between correlation and causation? Does it mean that because earnings are doing well, it's going to cause the stock to do well, or it is related? Now, for example, think about, medication. They say, hey, you know what? You should not be eating fat. Why? Because fat is correlated with heart attack. Oh, so you're saying that if I eat lots of meat, it's going to give me a heart attack? All right. I'm sorry, I'm getting into medicine here, but good job, 2475. If you eat a lot of fat, a lot of meat, does it mean you're going to have a heart attack? Well, yeah, because we show people that eat lots of meat, they have heart attacks. Hold on. Do they eat lots of meat and lots of sugar as well? You know what I mean? One doesn't necessarily mean that it's a causation. It's correlated, right? And I could tell you right now, when you look at this stock, that maybe the correlation is strong right now, but you need to learn. So what is our goal? The goal today, what I did is I bought a what did I buy again? I bought the October. This is to be treated very lightly. I mean, it's not for everyone, but basically it's an option. In fact, if you want, what I could show, well, I could show you the option chains, so you could see a little bit what went on with this name as far as the options are concerned. The stock went up 9%, right? 9%. Look by how much the options went up. See that? Look at that, right? Giga technology. So basically, what we're looking at the fact that the strike, I mean, basically options are essentially you buying the rights. Well, forget what the options about. Basically, if you buy a call, the stock is supposed to, the option is supposed to go up, right? So stock went up 9%, right? You ready? For the option that expires in October 18. Now, this is not for the faint-hearted. I just have to remind you. But for the option that disappears, it's not worth anything on October 18th. The option, if you had bought, I don't know, the strike price of 25, it went up 100% today. You could have doubled your money today. I made 30%. This guy made 100%, or this woman made 100%. Now, the reason why I only made 100%, I mean, I made 30% because I bought this expiry. See, I bought the January one. Right? I bought the January 25. I bought that guy right here. And that one went up 36%. But then again, I mean, I don't know. Suppose I was wrong. I got $5,000 involved here, right? Suppose I was wrong. It expires worthless in October 18, and that thing has to keep going up and up and up and up the closer you get to keep making that kind of money. So I'm probably going to get rid of it on tomorrow morning, if it's still there. I kept it. So I wanted to show it to you. So this is as January 17. So you could see that the price go up 9%, and I basically goes up. It triples. Now be careful, because some options, not all of them, right? Because that option here, the 17 one, didn't do anywhere. My advice to you is that you want to be around the strike price. The strike should be around the stock price. If you're too far away, it behaves in a weird way. Like, I mean, you could have 80% on the 10, but nothing happened on this guy because there was no open interest, right? The action is around here. See the open interest? The option is around that. Now, before you get into that and you say, oh, I want to make 30% in one day, I suggest you learn and understand the way I did, what goes around and what moves the price, right? Now, obviously, if you had bought the 40, you could have made 38, 40%. I mean, the most money you could make right now is if you buy, now October 18 is only 2 weeks from now. 2 weeks, that thing is worth anything. You make 100%, you get out. You don't play around. And of course, you go for the call. If you go the put, then it's the other way around. Okay, so there are many ways to skin that cat. So let's see where do I find stocks going like 10% a month and several of them. How to better time my buy and sell? Well, you need to find them one at a time, right? And you have to find them where no one is looking, right? Because if you go where everybody is looking, then it's too late. You're gonna go for nvda, it's too late. Yeah, you want to be there when no one is there. Of course, it's a very, but I've been saying it all the time: buy when everybody else is buying and sell when everybody else is buying, right? Tomorrow, if they keep buying, I'm selling, right? The name of the game is to increase your wealth. The name of the game is not to get married with a stock and hold it and seeing go up 2,500%. Nobody does that. Nobody does that. Even portfolio managers don't do it. They don't do it because they will never be able to keep their jobs, right? Suppose you're a project manager, you're a portfolio manager, and you put GCT in there, right? And that thing explodes. As it explodes, it's going to take a larger and larger share of your portfolio, right? At some point, they're going to say, whoa, hold on a second here. You only have two stocks in this portfolio. You have your GCT worth 90% of the value, which is what happened with nvda. One stock that's worth $3 trillion, so it's the size of your portfolio, and then you got 50 other stocks, but they don't count because their value is too small. You can't. We're not going to allow you to keep such a. You're going to have to sell some of nvda or put more stocks in it. We have to be diversified. Now, not all portfolio managers think that way. You got Warren Buffett that says, I'm not diversifying. I have 10 stocks and that's it. But the point is, that's how you do it, right? How to better time my buy and sell. Then what you need to do is make sure there's no negative news coming from the financial on this company, no bad surprises. So don't buy a stock you don't understand. Sales are going like this, earnings are like that. You don't want that. Earnings have to be up, sales has to be up. Maybe there's a bad surprise, but the point is the likelihood is less. And then second, you need to look at the chart. What is the chart doing? If the chart is going like this, right, and it's above the 52 moving average, then you're on the way up. It looks good. You follow the trend. If you're wrong, that's okay. I mean, at least maybe it's because, I don't know, today the market went down because they start sending ballistic missiles over Israel, but then they all got shut down. So now they're saying, oh, Israel is going to reply, right? But don't forget, the Iranian actually said, okay, I'm going to just want to let you know I'm going to bomb you, okay? I don't have too much damage here. I just want to show you, I want to save face. But nobody. Okay. So that was a surprise. The market doesn't like surprises. Okay. The problem is my concern is we may not have a war, but it's like we may not have a recession, right? But it's a perception that you have to worry about. The perception that somehow they are going to think, aha, you know what? This war is going to close the Strait of Hormuz over there in Iran, and then those ships won't be able to move and produce the oil, and then prices are going to go up. And then if prices go up with gas, then the CPI is going to go up. And if the CPI is going to go up, then the Fed's going to say, oh, hold on, hold your horses. I'm not going to lower the rates anymore because inflation is up. And why I tell you that? Because the Fed said itself, I am data dependent. So I ain't going to do it. So that's you have to worry about, right? Then this is where the market is difficult. And that's the reason why you go in, you take your money and you get out. You don't just stick around because you can't. I mean, what do you know? You're going to have to predict. First, you have to understand the stock price, the way it moved. Then you have to understand the financial. Then you got to make sure you understand what the Fed is saying, what they mean. Are they doing it to help Kamala? Are they doing it because they really think that there's no recession? 50 bips was a bit high. I mean, then you have to worry about what the Israeli and the Iranians are going to do. Then you have to worry about Biden is going to do. Is he going to come help the Israeli? I mean, how are you going to be able to? You can't possibly get them all right. So what you do is you go in, you make your money, and you get out. Unless you're willing to stick it out through the process with an increased revenue, that's fine too. But then you have to hold on. But the only reason you would hold on is because you know that the company is going to do well, and ultimately, like I said all the time, I mean, they don't want the stock market crash. That's the last thing because there's no reason for a recession. There's no reason for a recession. Why are you gonna have a recession? Right? Is this 2000? Is this 2008? Is this 1929? Is this the COVID time? There's nothing going on. Now, of course, what could give rise to a recession is if suddenly we have a stock market crash. But why would you have a crash? Just if that were to happen for whatever reason, I'm talking crash, I'm talking 10%, I'm not talking, then all they have to do is lower the rates. I agree. It's not a recession. It's a transition. We're transitioning here. And what Show Me the Money is really talking about is it's a transition into a different story, right? First, it was a story of AI, yay, Magnificent Seven, yay. You know what? I think we made our money. We're out. And of course, some of you still stuck around and thought this was going to go on forever. It doesn't. So now we're saying, okay, well, what's the new story here? Well, the new story, we're in a transition stage. We need to know, is this a recession or not? Because rates are going down. If there's no recession and rates are going down, we have a bull market on our hands, and we're back to the races. Maybe not with the Magnificent Seven, but potentially with the small stock, with the small caps, and that's what you want. So you have to be prepared for it, but don't go for it because it's small caps. You have to for it because it's a small caps, and you go for it because you understand the stock, and you go for it because they keep lowering the rates. Now, when he lowers the rates, I think there's 2 more meetings. We potentially have another, I don't know, about 50 plus 50, maybe 25 and 25. Then you get your 50. Then, because don't forget, there's also a transition into something else that's happening here. I mean, not talking about horses and cars, I'm talking about AI. You have to understand also that while the way we're doing it, we're looking one name at a time and trying to pick up a pattern. You have to realize that the hedge funds, what they do, they create algorithm within machine learning and large language models and AI, and they basically doing what you're doing, looking at the pattern in the stock, trying to predict, look at what happened in the past and trying to predict. There's a fair amount of chance, but there's also a fair amount of technology behind it, so that they're able to predict the movement of the stock, but not the predict the movement of the stock for the next 10 years. No, maybe the next 2 months, 3 months, 4 months, week, very short dated, right? So they kind of have a feeling that they're going to move. The only thing is they're all doing it at the same time. And if they're all doing it at the same time, the same way, they're going to sing the same way. And sometimes you're going to look at the market and say, what's the market? Why is GCI up 9%? There's absolutely no news out there. I don't know. Maybe a bunch of algorithms are looking at the stock and is saying, now is the time to buy. And as one buys, the other one says, oh, the market is, oh, okay, you know what? It's a trigger. The same way could go on the other way down as well. Okay. And that's what makes it volatile. So there's a lot of things. But at the end of the day, for you, what's important is you want to make money. And the way you want to make money is very simple. A, make sure you understand what the market is talking about. Now, it may be based on reality. It may not be based on reality. I do not care. All I care about is what The market is thinking is happening, not do we really have a recession? Because first of all, if there's a recession right now, you're not going to find out tomorrow morning. It's going to take a year before you find out. The point is a perception. The perception is what's important, right? I mean, the whole thing is about confidence, right? Now, in 2008, when we lost everything, is because they thought that the banks were no good and the money was no good, so nothing was good, so there's no more liquidity. Right now, we have liquidity, we have confidence, so the market is going to move in the right direction. Okay, so you need to first to make sure you understand what is the story in the market, not the real story, the story that you're being told before going to sleep, right? And then you have to make sure you understand how the assets move, what your stock is doing and or your option and frankly, how do you do? Well, you learn it. This is all about learning. You have to understand what it does and how it moves. Maybe every morning at 9 o'clock it moves, and then I look at what happened to GCI. Right, it was up 22% on Friday, then it went down on Monday, and then it went back up on Tuesday. But that's because it's a small stock; it's very volatile. Okay, but when it move up, boom, you grab it and you're out. But don't stick around. Say I'm going to make this. This is not nvda. Yeah, you could say, damn, I could have hung in and more money. No, you can't think that way. You cannot be emotional. And that's the other thing also. I mean, I'm sure you know that, but you cannot be emotionally attached. We're just sitting in front of a screen, picking a bunch of numbers, making some money. Of course, you don't want to be in front of the screen that everyone else is looking, because then it's a moot point. You want to be there by yourself. Nobody watches you, and you're picking the best fruits before everyone shows up. Okay, so that was just a short video to show you what happened and how we pick good stocks and how to keep doing it over and over and over and over. It is not impossible. I wouldn't say it's very easy, because don't forget, as long as there's not too many things moving around, we're okay. Like, for example, Friday, you got to watch Friday, because Friday, I think things are going to be okay. I mean, hopefully nothing with the Middle East bothers us too much, but Friday should be great. Friday should be some good news. I mean, you're probably going to see unemployment going up a little bit, okay, but not to the point where we're panicking, in a big kind of way. But just in case, you can buy a put on the market. I mean, I did on one. If you go into my Patreon channel, it's free for a week. Check it out. See what I did. I don't put all my trades. That's crazy. But I did make some money on a put as well that I put on. And I unwound it today, because look what happened. I said, oh, I mean, I didn't know that. I didn't know they were going to do this with the Iran was going to attack. All I know is there's a lot of uncertainty out there. So once in a while, just be short a little bit, just in case. You don't want to be long all the time, because so many things that you don't control. I mean, this is a much easier way, I think, to make money. Another way that you can make money is you could, which I did, but that's tough. That's rough. You could do rentals, right? But the thing, the business of rentals is there's a lot of risk that you're not aware of, and unfortunately, when you find out what the risk is, it's too late, and the return are not that great. I mean, let me show you something. I don't know if I show it to you before, but like I check my trades, right? So where's the camera? Right. So if you look at this, you see the green, right? This is September. So basically, I'm green most of the time. Now, we're not talking $10,000 a day. We're talking starting small, $5, $6, $7,000, $7,000 a day. A couple of trades, move in, move out, move in, move out, and we have time. We're learning now. We're not trying to make a killing here, right? You're like a hunter gatherer. You kill what you eat. Basically, we're not killing the whole forest. We're not burning the forest to get all the money and get out. Then go to the casino, because that is going to be a problem. You can make a lot of money, but you could lose 10,000 just like that. So forget that part. This takes time, and you're learning, and you take your time, and there's volatility, and it'll be fine. So let's meet up on Friday and see what happened. In the meantime, you could take that to the bank, everyone.